Okay, so have you ever wondered how the IRS manages to tax millions of people who can't get a social security number? It's a massive puzzle, right? Well, today we're going to pull back the curtain and deconstruct the surprisingly logical, though, pretty complex system they built to solve this exact problem.
You see, at its heart, the IRS was facing a huge identification problem. I mean, how do you track people in the system without the main identifier? So what they did was create this sort of separate parallel universe just for taxes. It's got its own logic, its own rules, its own tools. So let's dive in and see exactly how this hidden system actually works. So the whole thing, the entire system, it's all built on one single foundational idea. A special 9-digit number that was created for one reason and one reason only. And that number is the Individual Taxpayer Identification Number, or what everyone calls an ITIN. It was created way back in 1996, and its only job is to let the IRS process tax returns for folks who don't have a social security number. Think of it like a key, a special key that only unlocks one door, the door to federal tax compliance. And that's it, nothing else.
And it's so important to understand what that key doesn't do. An ITIN is absolutely not a social security number. It doesn't give you permission to work in the US, it doesn't get you any social security benefits, and it has zero impact on your immigration status. The IRS is really clear about this. An ITIN is for taxes, period.
Okay, now we get to the real engine of this whole system. See, before the IRS can even think about what to tax, it first has to figure out how to classify you. And the way it does this, well, it has nothing to do with immigration law.
And honestly, if you only remember one thing from this whole explainer, make it this. Your tax status and your immigration status are two completely separate things. Think of them as two different worlds that don't overlap. The IRS has its own set of very specific, almost mechanical tests to decide which tax world you belong in.
Basically, the IRS puts you into one of two buckets. You're either a resident alien or a non-resident alien for tax purposes. It's pretty straightforward. If you've got a green card, or you've been in the US long enough to pass what they call the substantial presence test, bam, you're a resident alien. If you don't meet those tests, you're a non-resident alien. And that one little classification, it flips a huge switch. It's the difference between the US taxing your worldwide income versus just the money you earn inside the US.
All right, so let's say the system classifies you as a non-resident and you're earning money from US sources. What happens then? Well, the system has a default setting, and it's a pretty powerful, blunt instrument designed to make sure the IRS gets its share. And that default is a flat 30%. The system is just set up to automatically withhold 30% from most types of US-based income that gets paid out to a foreign person. We're talking about things like interest, dividends, royalties, that kind of stuff. It's a simple, catch-all number that's just meant to be effective.
But here's where the system gets really clever. The IRS doesn't actually come after you for that 30%. Nope. They put all the responsibility on the withholding agent, which is just a fancy term for the company or person who's paying you. It's a genius move, really, because it turns the payer into a tax collector. It gives them a huge incentive to figure out your status correctly right from the get-go. Now, at 30%, it sounds pretty harsh, right? But it's not set in stone. It's just the default. The system actually gives you some tools to control that number, to lower it, or maybe even get rid of it completely. So let's look at what those are. Okay, so your two main tools are a couple of forms. Think of the form W8BEN as your shield. You give this to the payer before you get paid. It's how you certify your foreign status and, if there's a tax treaty, claim a lower rate. Then there's the form 1040-NR. That's your tool for reconciliation. You file it after the tax year is over to square things up and, importantly, get a refund if they took out too much tax. And this quote from the IRS instructions just lays it all out perfectly.
It shows you that direct cause and effect relationship. It's basically an ultimatum. Give us the right form ahead of time, or the payer has no choice but to hit you with that default 30% rate. Simple as that.
But here's the catch. To use any of these powerful tools, to file these forms and really engage with the system, you first need that key we talked about. The key that unlocks everything. The ITIN itself.
So how do you get one? Well, the IRS gives you 3 different ways to apply. First, you can do it by mail. You bundle up your application, your tax return, and your original documents and send them off. Second, you can apply in person at a special IRS center, which is great because they can check your documents right there and give them back to you. Or third, you can use an authorized acceptance agent. They're professionals who can help you put the whole package together, though they do charge a fee. Okay, now listen closely, because this is where the process gets really, really strict. The application package itself is straightforward. The form, your tax return, proof of identity. But, and this is the detail that trips up so many people, the IRS will only accept your original documents, like your actual passport or an official certified copy from the agency that issued it. A notarized copy? Nope, that's an automatic rejection. And believe me, this one little rule is probably the #1 reason why these applications get denied.
And here's something that might surprise you. You know, we've been talking a lot about non-residents and foreign income, but if you look at the actual data, that's not the main reason people apply for an ITIN. The single biggest reason, by far, is for dependents. We're talking about the dependents of US citizens or resident aliens who need that ITIN so they can be claimed on a US tax return. It's really all about family-based filing.
All right, let's take a step back for a second and look at the big picture. When you put all of these individual pieces together, you start to see that there's a real logic to the whole thing, even if it feels hidden at first. It really flows in a logical sequence. It starts with the problem. You need to tax someone, but they don't have a social security number. The solution? Create the ITIN. That ITIN acts as a key that unlocks the next step, classification. The system sorts you as a resident or non-resident based on tax rules, not immigration rules. That classification then triggers the default action for non-residents, that 30% withholding. And finally, the system gives you the controls, those forms like the W-8BEN and 1040NR, to adjust that default and make sure you pay the right amount of tax in the end.
So where does that leave us? We've seen a system that is, when you break it down, pretty logical. It's this whole cascade of cause and effect, all designed to solve a really difficult problem. But there's no denying how complex it is. You've got these super strict rules, confusing forms, and that very real fear of, mailing your passport to the government. It all boils down to one big question. Does all this complexity create a fair system? Or does it end up creating a maze that's just too hard to navigate for the very people who are trying their best to follow the rules and comply with US tax law?